Alright, good afternoon, everyone. Today is Wednesday, the 11th day of June, 2025. So we're going to get started pretty much right on time here. This tells you where to go to take the free trial. There's a free trial available there all the time. If you get your tools now, you'll be able to trade with us live. Not right now. Somebody just actually signed up for the trial, and I'm not going to be able to get your stuff going until after this session. If you signed up 10 minutes ago, I would have had it going for this session, but I'm not going to be able to get it going for you until after the session, okay? Let me just see if that person is even in here right now. You see, I just got a message on my phone about that. And Joe's not in here, okay? So he's not trying to get in here for this. Alright, anyway, this is where you go to take the free trial. Free trial there every day. You can sign up for the live trading webinar every Wednesday. I'm going to try to do these every Wednesday, okay? I can't guarantee I'll do one every single Wednesday, but I'll try to do one every week, one day a week at least. And I'll try to make it on Wednesdays. Alright, so let's get into it. I had a rough day trading today. I mean, I ended positive and all that. This is how I ended today. I was up, well, $422.50 per contract, or $4,225 per contract this morning. But it started out great. 1 minute, one trade, I was up $2,500. That's kind of where you want to be. In the last 5 out of the last 6 days, I got my goal for the day on the very first trade. There is something to me starting trading at 9:27. Between 9:27 and 9:30, I usually get the goal for the day. And I would have done it yesterday too, but I had just come back from that 4-day vacation, and I wasn't fast enough. That very first trade, I definitely had it on the very first trade, but I just wasn't fast enough to get it all going. All right, so let's just take a look what we have going on right here. When you're looking at this, when I'm looking at this. Now, there was a question that one of my longtime subscribers last night had called me and asked me, where do you draw these retracement lines? How do you draw those retracement lines? Give me a solid rule for the beginning and end of a retracement line. And the solid rule is this: here I can just show you right here. It just happened right here on the NQ. If you're in the blue, you go from where it went out of the oversold to where it went back into the oversold, the high and the low in between that section, from right here to right there. Okay, the high and the low in between that section. And then you look for a trading opportunity that's going to happen either right here at the 50% or down here at the 100%. All right. Right now we just got into the oversold right here, and it was down at the bottom that we got into the oversold, so that's not going to be an opportunity. But if you get an up close on this bar, right now, I'm trying to find my DOMs. If you get an up close on this bar right now, I just lost my DOM. If you get an up close on this bar right now, hang on, let me find it. Yes, NQ, here it is. If you get an up close on this bar right now, the bottom of the bar is right here at 62.50, so we'd be buying 74.50, like that, all right? That's one tick above where the bar is going to close. It's 12 points above the bottom of the bar. All right, it's going to be one tick above where the bar is going to close. So if we get an up close on this bar, it's going to pull it out of the oversold. It's going to be right here. It's going to pop us right into the trade, just like that. Now, when this number gets to 50, I'm going to bump my stop to break even. All right, this number right here, when it gets to 50, because I have 10 contracts on. So when that hits 50 like that, my stop's to break even. And so I'm in and out at break even. One really fast trade right there. All right, but when it hit 50, I was up $1,000 with those 10 contracts on. All right. Let me just respond to Greg. Yes, you guys can all hear me, right? Yes, sound is on. Because he is not having it. Alright. So that ended up working out well anyway. Alright, I was really aggressive with my risk management on that, but that's just the way I am with my risk management. But it ended up going up. I have a 75 tick profit target on that. Okay, well, hopefully my audio is all right. It seemed good earlier today when I was recording earlier. Everything sounded pretty good earlier. It was nice and clear earlier. So let me just move my microphone a little bit closer here, and maybe that'll help. All right. So that right there, that trade right there, was something that you could have seen coming, you should have seen coming, and it was an easy trade to take. Got down into the oversold right here. You just need the up close after that. Came out of the oversold right there. conservative trade right there at the midpoint. You're going to take that trade every time when you have the blue background. It's got almost the same trade coming together right here, but not the same exactly. What I was saying earlier about how to draw and where to draw those lines, the retracement lines. Now you're in the blue right here, so you can be going long. So you're going to be looking from where it came out of the oversold until it went back into the oversold. The high and the low in that section, that's right there. All right, so this is not going to be a good trade to take right here on an up close. It's an okay trade, but it's not a good trade. Over here on the Russell, this was a much better trade to take here. Well, actually it wasn't. I'll show you and I'll explain why. Okay. The reason I thought it was a better trade is because it came back down and hit the midpoint right here. That's a good spot to take a trade off of. The bad thing about it is this didn't make it up into the overbought, so you don't really have anything there that you can. I mean, it's risky if you take the follow-up trade after that, right? Because all you know when that happens is this, right? So it pulled back down. It gave you a trade right there. Actually, it didn't. It gave you the up close. It gave you a down close right there when it pulled out of the oversold. So that's not a trade you would want to do anyway. No, it did give you the up close. Okay, it did give you the up close. So if you did take that trade, it's not a trade I would want to take because it wasn't off an area that I would want it to bounce off of. So I wouldn't want to take that trade. So I'd want a deeper retracement, but it didn't make it all the way up into the overbought. Now I know I'm talking really fast, and I always tend to do that, but I just want to make sure you guys understand this. Right here, where it did not make it up into the overbought, and it turned back down, means you can't take any other trades in that direction. Okay, as nice as this trade is right here, it came down perfectly to the midpoint, and it came off the midpoint perfectly, exactly like you want it to do. But because this one didn't follow through, and you don't know if it's going to follow through at this point, all you know is that it showed weakness right here, and it may not follow through, so this could be a rounding top. Okay, you see that? So I wouldn't have done that trade. I would have waited and waited and waited, and when it got into the oversold the next time, which it still hasn't done, I'd be taking a trade. So we're almost there. I'd be considering a trade. I'm not going to consider this trade, though. Well, you got to redo everything. You might consider this trade, and let me show you why. Okay. This is where the bottom is, and this is where the top is. So a down close on this bar is going to put you right about here. Now, it's all jammed up in here, so it's not really the greatest opportunity to trade. But you have the opportunity to perhaps take an aggressive trade. It's not going to work out to be exactly right. So let's talk about that for a minute. Let me slow down. Exactly right. Let's define exactly right. Right over here. If you get an up close on this, that would be just about exactly right. Okay, let me show you why. This is what you're looking at. If you get an up close, it's going to be right there at the midpoint. It's going to go into the overbought at the midpoint. That is just about exactly right. So how do you trade that, you might ask? You do this. You have a low right here of 60.5. You're going to sell right here. 61.5 right there. Okay, so it just filled me right there at 61.6. That's called an aggressive short. Now it's got a 15 tick stop on it, but what it should do is turn right down right here and get down to the prior swing low. It might not. It might stop me out. It might stop me out, but what it's usually going to do, when you have an entry right here at the midpoint, when it goes into the overbought at the midpoint, it's usually going to bounce right off the midpoint and go down in the direction it came from. Okay, now this one might stop me out, and if it does, it does, but but the way it usually works out is it's going to go down to the prior swing low. Now after it gets 5 ticks in profit right here, I'm going to bump this stop to break even. Usually what it's going to do is go down to the prior swing low down here. Now this midpoint might work out to act as support right here. I hope it doesn't, but it might work out to act as support. We're looking for it to get down to 0.1 for me to hit the stop to break even on this. Okay, 0.1 to hit that stop to break even. Now this is with 10 contracts on. You guys see that? I traded with 10 contracts all year this year. I'm trading with 10 contracts. All right, those of you guys that have been following me for the past few years, you know how I am. You know how I have been following the 2420 blueprint and all that. We ended up stopping out on that. Let me write that down. Okay. 1NQ, 1GC minus 50. And so we ended up stopping out on that trade. That was an aggressive short. Now let me draw in these trades that I took. All right, we took a break-even trade over here on that one. Just so I can go back and look at this later. That was a break-even trade there, and this was a stop out over here. That was an aggressive stop out, so I'm going to do the aggressive just a little bit different color. Okay, I'm going to do red, but I'm going to do a different kind of red. Different color red, like that. Alright, so it sets us up for another trade. Alright, does anybody have any questions at this point? I'm 22 minutes in already. Okay, so let's go back over here on this, right? Everything started over again right there. Okay, right there, everything started over again. So on the NQ, when everything started over again, right in here, this down close where it went into the oversold right there at the midpoint was a spot where you could go long, aggressively go long. Like I just went short over here. You have the same thing except it's a long trade over here. Now, I took it and I just moved my stop to break even. I'm going to lock in 4 ticks on this, alright, because I got to break even on the last one and I got just 4 on that. Now it is a little jammed up over there on the NQ. Okay, it's just a little jammed up over there on the NQ. But we'll see how it ends up working out. There it is. It's running up right now. Okay, so that was an aggressive long trade. Now the aggressive ones I'm going to make just a little bit different color. They are still going to be blue, but they're going to be a little off the darker blue. Alright, and again, that one worked out. That last one worked out fine, and that one worked out fine. So if I just stuck it out with both of those trades, then it would have worked out. The one over here that we stopped out on, it stopped us out pretty much to the tick, and now it's going down and doing what it should do. Okay. So that, it doesn't really change anything all that much. Now that it's done that. Okay. I'd like to see it get a lower swing in place right here. That's what I'd really like to see. You see how we went from the red into the blue, and now we're back in the red background. Okay. You guys see that? Everybody see that? Alright, I'm sorry, the Russell had a trade here too. Crap. Sorry, the Russell had a trade here too. Let's go to break even on that, and I want to lock in 10 ticks on that one. Okay. Did I talk about that trade? It was right here. It went into the oversold, and let me draw it for you. I drew this already. I guess I already drew it. So I must have talked about it because I already drew it. But this right here is where you're looking to trade, right in there. And we picked up 10 ticks on that. Sorry. And that was another aggressive one, so that's going to be a different color blue again, like that. And I got to make it so I can see it later. Alright. So, back over here now. That brings us up to there on that one, and here on the ES. This is where we came out of the oversold. This is where we're going back into the oversold. So your high and low go from here up to here. Okay, that's what you're looking at there now. And we came out of the oversold here. We got back. We haven't gotten back into the oversold yet on this. The gold changed directions here. We're back in a blue background on the gold. Alright, so here we're going to go now from here up to here. Alright, that's nothing that you want to trade right there. Right, you got to get that down into the oversold to consider a trade, and it's not going to be a place you want to trade right here. It's all jammed up. Now, is it possible for us an outsider admin the trade to explain the trade, because it usually does the opposite when you miss the entry? Masood, yes. Let me slow it down. Okay. I know I just been talking nonstop for now 24 minutes. I'm trying to keep up with the markets. Okay, but let's look at the gold. Let's just look at one market. And this one's been pretty choppy right here, but let's just look at this, right? You have a blue background, right? You have a nice blue background there. You're going from where you went out of the oversold to where you went back into the oversold is your high and low. All right, so this is your high and low, like that. Okay, so you're coming off the midpoint right here. You're in the oversold, you're coming off the midpoint. So watch this, Masood. You got a low here to 61.7. I'm going to buy 62.7. A buy stop limit is on right there before the trade fills, right? 62.7. Alright, it should actually fill me right here. It actually gave the up close already, so I'm going to drop that down a tick since I can. Nope, it just filled me at 62.7. Okay, so we're long 62.7, so I put that on ahead of time for you. Okay, on the gold. Now we get 5 ticks in profit. I'm going to bump this stop to break even. Alright, it's got to get up to 0.2, and I'll bump that stop to break even. The arrows are after the fact, George. I'm drawing the arrows in after the fact. Right? Those are the trades that I took, whether they stopped out or made profit or whatever. Literally, you're talking about the yellow arrows? You're talking about the yellow arrows, aren't you? Okay, no, I'm not taking the trades by the yellow arrows. No, let me explain what the yellow arrows are, in case you don't know. Let me explain what the yellow arrows are. These yellow arrows trigger whenever it goes into the oversold with a blue background, you're going to get a yellow arrow pointing up. Whenever it goes into the overbought with a red background, you're going to get a yellow arrow pointing down. What that's telling you is that the next bar, the direction you might want to be going in the next bar, the very next bar. Okay. So what I'm actually doing here, George, is I'm using the price action to determine which are the higher probability trades to take. Okay. Now let me explain that a little. We stopped out again on the gold. Wow, gold is just whooping us right now. That's alright. We got plenty of time to get that back. Let me draw that in. Draw that in. That was right there. I feel like I probably should add my stop and break even on that one too, but I don't. Or I didn't. So what we're looking at here now, I should be taking these aggressively with the trend. So I should have been long on that bar right there at the open of that bar, and I should have been long at the open of that bar, and I was pretty close to long on the open of that bar. I should have my stop and break even on that instead of stopping out. But anyway, I digress. Let me draw something over here. Okay, so this was yellow earlier when I drew it. No, okay, so markets are going up and they're going down and they're going up and they're going down and they're going up and down, right? Now you get in those yellow arrows down there. When the market comes down to a place like this, you get a yellow arrow before it hits the pivot. You get a yellow arrow that points up. Okay, let me just draw it with an arrow instead. I'll draw it with an arrow and I'll make it yellow. Okay, you get a yellow arrow that points up like that. All right, but up here, actually you wouldn't get that. You wouldn't get that here because it's a red background. So let me do it with a red background. You get a yellow arrow here that points down because you have a red background. Now over here in, well, let's just go with what I drew. All right, that's where you're going to get yellow arrow when it goes into the overbought. Goes into the overbought on a red background. You're going to get a yellow arrow that points down, suggesting that the next down close could be a place to trade. Okay, but what I'm showing you is the way that the market works. Let's finish this drawing. Let's start this drawing from over here. Okay, we'll go down like this and go up like that and then go down like this. So what I'm showing you is that just because you get the arrow, just because it went into the overbought and you get the arrow, doesn't mean that that's really a great place to trade. It means it's a good place to trade. But what I'm trying to show you is the price action, what the market actually does do over and over again in the higher probability places to take a trade. They're going to be here where it retraces 50%, and sometimes when it traces 100%. And there's a dynamic between the 50% and the 100% that you need to understand, really. Because once it retraces back here to 100%, when it starts right here, when it traces down to this, your first target area should be right there. When it goes all the way down here, your first target area is going to be right there. Okay, and if it breaks through that, then your next target area would be there. But the chances are it's not going to break through that. It's going to go here and then go down like that. Right? Now that's a lot of words. It's a lot of words to explain something that I think is really fairly simple. Okay? What the arrows are suggesting to you is when you have one of these spots right here, or you might get a spot in the middle of it where it has a hiccup and it pulls up a little bit. It might be one right in there. Now, it's not going to have it on a blue background, but it's suggesting that you should go down when it's like that. And then, when you have a blue background, it's going to put one over here, suggesting you should go up right there. And over here, it might have one right here, suggesting you should go up right there. As a matter of fact, I can tell you where the arrows are going to be. You're going to have one right here in a blue background, suggesting it should go up right there. You're going to have one right here, suggesting it should go up right there. You're going to have one right here, suggesting it should go up right here. Alright, you're going to have a red one right here, suggesting it should go down right here. Okay, you're going to have one right here on the red, suggesting it should go down. I can tell you this ahead of time because this is what's happening down here. Alright, if it goes into the overbought with a red background, you're going to get an arrow pointing down like that. Like right in here, there'll be one right here. Okay, that's suggesting that the market is going to start going down. The background color is saying what direction you should be thinking. It's the longer term trend. And everything that's happening on price in front of you is suggesting the next level of, I don't know, clarity or accuracy. So if I bring this up, you can see where I drew that right there. There's an arrow there. There's an up arrow there. There's an up arrow there. There's an up arrow there. There's a down arrow. There should be a down arrow here. Oh, I drew it over here. Okay, I drew it in the wrong place. This should be over here. There's a down arrow here, and these were, I wasn't looking at the background color. You should have an up arrow there, an up arrow there, where it went into the overbought on a blue. I went into the oversold on a blue background. Okay, just so you understand. So I'm not going just by the yellow arrows. The yellow arrows are there to give you information, to get ready, to prepare you. And there's actually alerts based off of those yellow arrows. If you want to put alerts on, they're in here. The alerts are the TV trades. Inside the TV trades, it is called the sell advance notice and the buy advance notice. I created some of these in the last meeting. But to create an alert on that based on the yellow arrow, letting you know that a trade is likely to set up. Okay, letting you know that a trade is likely to set up. You can just click on sell advance notice, do once per bar close, because we're using range bars. So you want to do once per bar close. Then in here, put in whatever message you want, like sell soon. This is one I created last week, sell soon. And I think I shut them off. I might have deleted them, but I'm not sure. And the notifications, you have different notifications. You can have a notify in the app that brings it up on my phone. You can have a notify toast that brings it up over here on the side. You can have it send an email, a webhook. Now the webhook, you might see things pop up over here on this side every now and then. That's stuff that's popping up in Telegram. Okay, if you see it popping up on that side, it means it's popping up in Telegram. Because I have webhooks that go to Telegram channels. Then you can have it play a sound as well. Alright, that is all to get you ready for the trade, to let you know that a trade is likely to come up. A trade is likely to happen. So if you're doing like 10 other things, you're like me and you have 100 things going on at one time, and you want to be notified that a trade is likely to happen soon. You want something to tell you, something to buzz on your phone in your pocket, or something to ding on your headset, or pop up on your screen. Just create an alert. And the alerts are already there for you. They're custom alerts based on all those different things. If you look in TV trades, if you look in here, we have them based on the mid-trend trades, based on the, let me show you, the buy and sell alerts right in here based on these arrows. All right, we have them based on those, and go back in here. We have them based on those. That is the buy alert. The sell alert are based on the red and blue arrows. The MTT buy alert and sell alert, those are based on the green arrows that happen in between, in the middle of a trend. And the buy advance and sell advance notice, those don't trigger as well as they should. But the long and short potential of the yellow arrows and the buy and sell advance notice for the blue and red arrows. All right. If you guys don't know what those are, does anybody know what those are? Not know what those are? You know what? Why don't I just go into it? I'll just do the whole thing. Oops, that is the wrong thing. I don't mean to put that there. Let's just get right into the whole thing. Okay. Inside the TV trades, by default, it shows up with this on. All right. This right here, the trigger alert notice, those are the yellow arrows. So you have these blue arrows that say, they happen at the beginning of a trend, usually. They're going to happen at the beginning of a trend. All right. And if you want the short ones, that's it. Some people only like to buy. They only like to go long. They have something that says, it's an up day and I only want to take long trades. Fine, just put the long trades on. You can do a lot of different things, but if you want to put both on, or if you just want to put the shorts on, just click just the shorts, and you're going to get just the red arrows, right? And they're going to happen at the beginning of the places that the market should start going down. I don't know where I took that from, but it doesn't really matter. I'm just deleting. They're going to happen to places where the market should start going down, all right? More than likely, where it's going to start going down, all right? That's what the red arrows are. And there are alerts for those, and there are alerts for the bars leading up to that. If I go in here and I click on this and buy, sell area, up, down arrows, bar colors. Is that right? Oh, I gotta shut it off down here. Let me shut that off. There you go. There are alerts for the bars leading up to that. If you have a red on a blue background like that, it's gonna give you an alert. If you have it set, it's gonna give you the alert in here that says get ready for a short. Alright, if you have blue on a blue background, it's not going to give you an alert ahead of time. But if you have red on a blue background or blue on a red background, it's going to give you an alert saying get ready, the next bar is likely to be the trigger. Okay, those are the different alerts that you can get. If you want to get them for the long side, then you turn this on, show arrow for the longs, and if you have blue on a red background, it's going to give you a notice ahead of time to let you know there's a trade coming up. Alright, if you don't turn the alert on, then you won't get that notice, but you can go in here and turn that alert on. That alert is called, it's inside TV Trades, it's one of the buy advance notice and sell advance notice. That is for this and this. That blue on the red background or blue background is what that is. Okay, the actual buy and sell alert, the red arrow, is this one right here. That's that red arrow is that one. The buy alert, this blue arrow, is this one. Okay. Now, that was, in the beginning when I first created TV Trades, that's all I had. That's all I was going with, and it worked great for equities, because originally I only wanted to do this for equities, but I had so many people that wanted it for futures, and it works great on futures, so I brought it to futures too. But in the original version only had that. It only had the buy alerts and sell alerts that triggered like that, and it was all for equities, because you could go to, like, I don't know, Apple, let's say, and it was, it wasn't originally based for the range bars for Apple. You don't want to do Apple on a 9 range because it's $200 stock, but you can do it on a 100 range. That means it's every bar is $1. Okay, and that's what it was based on originally. That's what I created TV Trades for originally. So you can trade equities like this, and this is awesome because you can trade options based on this. And I haven't talked about the options in a really long time, but if you get in like the last 15 minutes between, say, 3:45 and 4 o'clock, if you get one of these arrows that suggests you should go long or short, you can buy either calls or puts based on those arrows that usually work out really well by the next morning. When the markets open back up the next morning, it usually works out really well. I guess I can do that webinar another time, but that was what it originally was. It was just that stuff. Okay. But then I took it to the next level. What market was this originally? Was this gold, right? Was it GC? I don't know. Hang on, let me just minimize it and I'll be able to tell you. It was... yeah, it was GC. That's what it was for originally, right? You guys want to talk about options, that's a whole other subject. And I'm happy to get into that with you. We're on the Q contract. And we're on the 9 range on the Q contract. Alright. So that's what it was originally all about. And then people said, well, what about in the middle? If you miss that one, then you don't get anything until you get one going in the opposite direction, or it goes in the opposite direction and then comes back. And that's where we came up with the mid-trend trade, which is... let's show this. Where the heck is it? Mid-trend trade. I reorganized these things on myself, and here it is right down here. Mid-trend trade. Okay. So the mid-trend trade is like these green arrows here and these arrows right here that happen in the middle. Alright. And these little black arrows are notifications to let you know that you have a mid-trend trade that's likely to be coming up. Alright. Now they don't happen before every one, but it's to let you know that the next bar could be the mid-trend trade. Okay. And then, once I got more, okay. All right, Masood, I'll get into that. We'll put it on a list of subject matter for maybe next week. Okay. But he's talking about options. Like this right here is suggesting that the next bar could be a mid-trend trade. That little black arrow right there is suggesting the next bar could be a mid-trend trade. So you can get ready for it. And there's an alert for that. Okay, it didn't end up being that, but there's an alert for that. And here on the TV Trades, if you go here, this is a mid-trend trade advance notice, buy notice and sell notice. So if you had this on right now, you would have just gotten an alert that popped up over here telling you that you had a mid-trend trade alert notice. Okay. That's that. Now, this right here, the bias level, is to stop you from having things like that. You see, if you click the bias level on, then what that says is we're only going to take long trades when we're above whatever moving average that was in there, or we're going to take short trades when we're below that moving average. You see how there's no short trades popping up in here right now? That's because we're above that 233 simple moving average. But right over here, we're below it, and so you're not seeing any long trades popping up in here. Do you understand that? This is the number that you put in here, this 233. That is a simple moving average. If you look on the I that's after all of these, I put a lot of information in these explanations. Okay, so if you're ever curious, just hover over the I, and it tells you. Gives you some good information. All the stuff that I'm telling you right now, it gives you. This is a simple moving average, 233 simple moving average. So if I were to put a 233 simple moving average on here for you, go to technicals, we go to the simple moving average, simple, that's what I'm looking for. This guy. If you throw that on there and you make it a 233, then you'll see that you're only going to have short trades when you're below it, you're only going to have long trades when you're above it. Okay? Now you can adjust that number in here. Right here, you can make that a 55 if you want. And so if you make it a 55, you're going to get a lot more of these things back and forth. Okay, back and forth between the blues and the reds. Let me see if we have some. Yeah, right here, this back and forth between the blues and the reds. See right here, if you had the 233 on right here, you'd only be getting the blues. You wouldn't have anything going down right here. You'd only have the stuff going up. But because we changed that to a 55, it's now saying, okay, this, anything below that is okay for shorts, and anything above that is okay for longs. Do you see? That's a feature that you have built in to TV trades if you want to put it on. It's called the bias. All right, if you take that off, then it puts them on everywhere. It doesn't show a bias at all. It doesn't choose a bias at all. If you don't want to do the mid-trend trades, don't turn it on. Okay, if you don't want to do the short trades, don't turn them on. By default, you're only going to have the long trades on. Okay, and so if you go into the style, you turn on the trigger alert notice. That means what I showed you down here. Which one I showed you? This one, I think. Let me just see and make sure that that's the right one. Yeah, that's the right one. Okay, and what that's going to show you is every time this goes into the overbought in a red background, overbought in a red background, overbought in a red background, oversold in a blue background, oversold in a blue background. Okay, George? I just want to make sure I answered your question fully, because I think I might have answered a bunch of other questions while I'm doing that. Alright, so let me take some more trades in here, guys, because I'm actually negative on the session because I had those two stopouts on the gold. While I was saying all that stuff, we had some trades here on the Russell that we could have taken. We didn't have anything there on the gold that would have been worth taking, but we had some nice trades here on the Russell that we could have taken. And over here on the NQ, we had a couple of nice trades there that we could have taken too. So right now, what you're looking at right here between here and here is what you were looking at, and now you're looking at this from here down to here. If your retracement up into this level right here, right? I hope it goes down a little bit further and gives us a little bit more to work with. Over here on the ES, you're looking at the same thing from here down to here, okay? And over here on the Russell, you are now looking at from here down to here. And on the gold, it just flipped to the blue background, so you're going to be looking from here up, okay, right now, from here up to here on the gold. Okay, you guys all follow me with all those things? So looking for a retracement to here, or a retracement to here, or a retracement to here, and a retracement to here is what we're looking for. Does that make sense? Okay, now you see because we went down a little bit further, that midpoint goes down a little bit. Like that. And like that. Alright, so we could have a trade here on an up close. An up close should bring that into the overbought, and it should bring us right up about here for a shorting opportunity there on the NQ. Right in there. Should be a shorting opportunity on the NQ. Now you can take it a couple of different ways. The S was kind of the same thing, but not quite. The S wasn't exactly good. On the S you want to wait for the down close, right? On the NQ you could have taken it right here on the up close aggressively, or you could wait for the down close and do conservative. The Russell is kind of the same thing. Okay, so I gotta bring that over here on the ES. I'm looking for the down close here on the Russell and on the ES and on the NQ. And if we get that, we'll have a trade on each one. Okay, that's what I'm looking for. We got an up close on the ES, but we get a down close, but we can still take a down close there on the ES if we get it. Okay, same thing on the NQ, same thing on the Russell. And there it is on the ES. Oh, the S flipped to a blue background. Well, it flipped to a blue background, so it kind of disqualifies the short trade. It should work its way down here anyway. The Russell also gave the down close, and the Russell background stayed red. So the Russell's actually going to trade from where it is. The NQ gave the down close, and the background on that stayed red too. So, so we have trades. Here's the Russell. Alright. Here's the NQ. And the S didn't actually turn into one. But the S and the Russell and the NQ did. The S, the background color changed on you. So we need this to turn into a 50, this to turn into a 10. I'm sorry, this to turn into a 5, this to turn into a 50. Let's see if I can watch them both. Put them right next to each other so I can see them better. Alright, this needs to be a 50 and this needs to be a 5. And then I'll be able to bump the stops to break even. Okay, I don't really need to look at the charts right now. I need to look at the DOM because it's the price action within the DOM that's gonna determine what's going on here. Now my stop is 60 ticks away here on this, and it's 15 ticks away here on this. Uh-oh, and we just hit both of those stops. Man, that was tough. All right, well, we still have time to get that back. It's 309, so let me write those down. Oops. Okay. That was unfortunate, but it happens. That was a conservative trade. That was a short right there, and this was a conservative trade. That was a short right here. That is the truth about trading. Nothing works 100% of the time. Alright, do I have to turn off the 233 MA to make the other trading choices show on the chart? What do you mean, Hal? Turn off the bias line to make them all show? Yeah, if you shut off the bias line, then everything's going to show. Right, if you turn on the bias line, then it's only going to show what's above or below the bias line. Okay. Let's draw this now over here. Oops, that's not the right beginning spot. This is the right beginning spot. And this is now blue, so it's just the opposite direction now. And this is now blue. So we just got snagged up on 2 out of 3 of those right there. Oops, I didn't drop that. Okay, so a down close here isn't going to do, but if we get a wick that comes down here and gives us an up close, that would be okay on the Russell. And over here on the NQ, a down close here would be okay. Alright, we seem to be in a little bit of chop right here. The ES, the up close there was okay. This up close right here on the ES was a good spot. Okay. So I missed that one on the ES, that good spot right there. I'm gonna cancel the order I had put there. And this wasn't a good spot here for a trade. It came out of the oversold and everything, but it was an okay spot. It wasn't the greatest spot. It should get up to the prior swing high, and that's what you'd expect out of that. The same thing here with this. You know, this is going to be at the prior swing high when it comes out of the oversold, so it's not going to be a great place to trade that. Okay, and over there on the gold, let me draw that for you on the gold, right? Because it changed directions on us. We have a red background right now. So that's what you're looking at there on the gold. Alright. So I need a couple of decent trades here to get back where we want to be anyway. Positive. Where we want to be. That's where we want to be. Just positive will do. Alright. We're going a little bit sideways here. We are in a blue background, but we're going a little bit sideways here. We came out of the oversold here. We did make it all the way up to the overbought, but we need to get back down into the oversold on the ES. Okay, and over here on the NQ, we did make it into the oversold. We came out of the oversold on the NQ, so you could actually Alright, we didn't come out of the oversold yet over there. Sorry, we come out of the oversold. When we do come out of the oversold, it'll be on this bar, it'll be up here. That won't be a great place to trade. Alright. Because it'd be right at the swing high. It'd be right at resistance, the first level of resistance. Okay. I wanted to see... There was something I wanted to see here that I cannot see right now. Oh, there it is. That's what I want to see. It's hidden back there. Alright. So hopefully we want to get some good opportunity in here, because right now we need to get out of the hole. So on the gold, we'd be looking for a down close in here. We've gotten into the overbought, and we need a down close. Okay, with a red background. And we're going kind of sideways right here on the Russell. And we're going kind of sideways right here on the S. And we are waiting for this to give us something over here on the NQ. Okay. We need the down close on the gold. Right in there. Push this down. Be right at the midpoint. That'd be a pretty good spot. Does anybody have any questions at this point? We're pretty choppy in here right now. So to be aggressive with the chop right now, you could buy anytime it goes into the oversold. Right here you could buy anytime it goes into the oversold. Right here you could buy anytime it goes into the oversold. That's being aggressive within the chop. Right, in the direction of the trend within the chop. All three of the indexes right now are pretty choppy. So it's just one way to trade this stuff. It is risky. And alright, so we just had this blue candle right here. Now it turned to blue background as well over here on the gold. It's not in a great place for a trade setup doing what we're doing here right now. But on the bigger picture stuff, this is a great place for a trade setup on the gold. Your stop would have to be down here, right down here at 62.4. Alright. Now, with a range bar, I like to use range bars the way I always use range bars, and the stops on this would be a 15 tick stop. But, well, it is what it is. Okay, so being aggressive, because we're in chop, you over here right now, you would be looking for this. If you ignore on the TV trades, let's just ignore the arrow, okay, for right now. Ignore the arrow. And so you would be looking for this to come here, like that, give you a down close, get into the oversold. Over here right now, we didn't get into the oversold on this one, so we can't be aggressive on the long trade right there on the NQ. Okay, and we need a down close over here on the gold right now. Okay, and this right here is a place to get aggressive on the Russell. You're at the midpoint of this pullback right here. All right. And you could be aggressive, or you could wait for the conservative if it pops out. It just turned to red in the background, so it's not a place to be aggressive on the long side because it just turned to red on the background, so you can't do anything with that right now. We got an indication that that was going to happen when you had the red candle on the blue right there. Okay. Alright, so we still have the blue over here going on, and you could be... you could be aggressive on the NQ, just going into the oversold with the blue background. Okay. So I did that, and I'm long there, and I am going to lock in some profit a minute, 44.75, and I'm going to lock in 51.75, whatever that is, 7 points, 28 ticks. Okay, I have a target up at 75. but we're out with 28 on that. Okay. And all right. And that turned into a red background. That was aggressively long. Was it right back here? It was this one I got aggressively long on, I thought. Right there. Not exactly sure about that. Anyway, does the range figure have settings calculated on a certain number of bars? You mean, does it look back a certain number of bars to check things out? Hell, and is that a number you could change? Does it have a length set to it? It does have a length set to it, but it's not anything that you should mess around with. If you go in here, it's actually got a strange formula to it where it's at 37 right now. And it's not really going to change anything if you change it a little bit. Okay? Because it's got the way the formula is built. It would take a huge change to make a difference with that. Okay, what you can change, Hal, is the time frame you're in. Right? Rather than change the indicator, because you don't want to change that. It's going to change the calculations that are done. Change the time frame that you're in. If you're looking at this and you're not getting enough trades, or you're getting too many trades, if you're getting too many trades, go to a larger time frame, a larger range bar. If you're not getting enough trades, hey, you made it, Wayne, all the way from Copenhagen. Nice. If you're getting too many trades, then go to a larger time frame. That's all you have to do. Okay. So we're looking for opportunities here. Now the gold is on the long side. It does not look like I have anything going on there on the long side. And the Russell were red backgrounds, so you're going to be looking for something on that one on the short side. So this is what the Russell looks like, right? You're going like that on the Russell. And over here on the gold, let's just redo this one right here. Actually, you're doing it the other way. On the gold. Sorry, no, you're doing it. I'm sorry, gold. I was doing that right. You're looking for the pullback into this area right here, the gold. And looking for pullback here. And over here where it came onto the overbought. Looking for a pullback up to there right now. And over here where it came onto the overbought here. You're looking for a pullback up into this area right now. Okay? That's what you're looking for. Alright. So Russell's at kind of a strange spot right here where you could take the aggressive long trade here, or you could, because the open was right here when it went into the overbought, it's not right at the midpoint, you could let it pull back a little bit like it's doing right now and then take the aggressive short right there. Okay, right in here. Well, this would be, you could wait for the conservative short now for it to come out. But right here where it gave the up close right here where it went, gave the up close right here where it was sort of at the midpoint was what I was looking at. Alright, you could wait for the conservative trade now for it to come onto the overbought, and the down close right here should put you right there at the midpoint. That'd be a pretty good spot to trade that right now. Over here, yeah, pretty much the same thing going on with the ES, except on the ES, it's kind of ugly the way it's coming together because there's not really any room for anything to move. Alright, you almost have the same thing going on over here on the NQ, but you're not in the overbought on that. It's just not a lot of room for stuff to move around. Same thing over there on the gold. It's in the opposite direction on the gold, but it's all the same right now. There's just not a lot of room for it to move around. You want this to go down to the prior swing low, this to go to the prior swing low, and this to go to the prior swing high. That's what you want to see happen right here on all three of those markets. Alright, the NQ is almost at a point where you could aggressively short it, but it's just really messy. Everything is really choppy in here right now. Okay, right there you'd have the open, well, the close of the bar is right here at the midpoint. That's kind of what you want. It didn't actually go into the overbought, so it's still not the greatest opportunity. Crap, I took it anyway, but here it is. I'm going to lock in 57.50 down to 52.50. That's 20 ticks. 24, 28, and We're out of that one. Now, that wasn't the exact right trade to take there. Sorry about that. The reason it wasn't is because it didn't go into the overbought. It would have been a great trade to take if it would have gone into the overbought, but I had the order waiting there anyway. Alright, so this changed directions. See, that's what I was. These didn't have any place to go on the downside. These guys didn't. This had some place to go all the way down to there with the aggressive trade. The markets have been all day, John. This was one of my slowest days of the year. You know, in the morning session, it was one of my slowest days of the year. And I expected this session was going to be kind of slow too. I mean, right now I'm trying to get back to positive, but no, I'm just going to take the trades as they come. It's 3:23. We have 37 minutes left, so I'm just going to take the trades as they come, and we end up with what we end up with. But I did have quite a few stop outs in this session. An unusual number of stop outs. And today, when I stopped out today, I'd made mistakes today, and I ended up stopping out on. Well, I had 2 mistakes I made, and I stopped out on both of them, so I had to recover from that, and I was able to. But you know, usually the market's a lot more active in the morning session. Right now, it's pretty active right now, and I expect going into the 4 o'clock hour here, it's going to get pretty active too. So we should have plenty of opportunity here. So right now, what we're looking for up here, this is what the trend line looks. I mean, not the trend line, but the retracement lines look like. Okay, on that one, and on this one, and on this one, and over here, the gold is flipping back and forth quite a bit between the overbought. I mean, the red and blue background is what I'm trying to say. That's what we're looking at there. Okay. So a down close on this bar is not going to do it, but a down close on the next bar to put us right at the midpoint probably needs to be aggressive. Here's what that means right there on the 50 range. You just got a blue arrow on the 50 range, one of those big blue arrows. That's what you just got on the 50 range. That's what that means. Okay, for Tesla, and it's saying to buy. So remember what I said earlier. If between 3:45 and 4 o'clock, if you get something like that to buy Tesla, you would go look at options for Tesla, like maybe 1 week out options calls. Okay, and those alerts are set up for you guys. That went out to the Telegram channel. Okay, so anybody that's in here who's an active subscriber, that is also in the Telegram channel. That alert that just popped right there. Okay, just so you know. Yeah, Wayne, I was missing you at the beginning because I couldn't tell if my audio was working or not. It took me a few tries. Alright, so here we are right there on the NQ. Now that is the spot to be aggressive, right there on the NQ. Okay? Right there, the open of that bar right there was the spot to be aggressive. Now it's already run like 30 or 40 ticks into profit right there. So if you didn't get it, you would have had your stop. If you did get it, you could have run your stop to break even. If you want to wait for the conservative trade, that's also going to be right about here at the midpoint on an up close right here. Okay, now look at these guys. I wasn't even looking at the SCS, went right through the midpoint. Yeah, I gave a gap down right there. Okay, am I in anything right now? I don't think I am. I probably should have been. We just got a gap. It looked like something happened because on the NQ, the liquidity just went away. We got a gap in between the bid and ask on it. You see? Between the bid and the ask. That was something I showed you guys earlier about when to trade, when to trade and when possibly not to trade. Now, let me see. Alright. So what do I have going on? There is had some order waiting. Let's draw this again. We have a blue background, so you're going to be drawing from the bottom to the top, like this. Okay, bottom to the top like that. So right in here is a good spot to be long on the gold. Okay, on an up close right there, well I guess right there. That up close right there is a pretty good spot to be long on the gold. It should make it up here to the prior swing high. I ended up missing all this on the NQ right here. I got a little bit on that, but I ended up missing all this where it came out of the oversold. Right here it went into the oversold. There was room on that candle to get your stop to break even, at the next candle I guess to get your stop to break even. It's at a point right now again where you can jump on this on the long side. I want to draw it for you so you can see it. Okay, like that right there. So now I'm going to throw my stop at break even on that. Here it is, my stops at break even, and we're in right here at 62. I'm going to lock in 4 ticks, and there I'm out with 4 ticks on that. Okay. So the NQ is the only thing I got back to positive 1 so far. It's 3:29. I have 30 minutes left. There should be plenty of time here in the next 30 minutes to generate enough trades here to get going where we want to be. Here on the ES, you would be drawing like this, okay, from the top. Oops, sorry, right here. From the top down, like that, right there, coming out of the overbought where it went back into the overbought. Not really a great place to trade right there. You don't really want to do anything with that. Over here, we just flip to the red background. So here you'd be drawing from right here down. Okay, if your retracement right in here is still not going to be a great place to trade. Over here on the gold, as I said a few minutes ago, the upper close right here was an okay place to trade. Not the greatest because you would have to grab it right here and it should go up to here. But again, still not the greatest because everything is so jammed up in there. Okay, the markets are making it tough. Break even on that, plus 10 on that, plus 12 on that. Those trades just came in, Netflix and whatever that other one was. And we're out with 12 on the gold. Okay, and those are back here. Sorry. I know I had a red background, but it was from back here. The actual trade was on the blue background. This here, we're going to have to draw that down a little further. Okay, and this, draw that down a little further, like that. So this right here on the S isn't a horrible place to trade. You want the up close here on the you want the up close there on the Russell. Okay. I managed to just grab a couple of ticks out of that ES. Okay, that's my first ES trade in this session. Alright, we're getting back there, guys. Alright, so on the Russell, a down close here would be a conservative short trade. A short right here where it currently is. You know, the entry was, well, the close of the bar was pretty close to the midpoint here where it went into the overbought. So you could grab it right here without waiting for the down close, without waiting for the conservative down close. Okay, you can do that. This just switch directions here on the ES. So if you're going to do that on the Russell, you got to get your stop to break even right away, like that. And it should go down to the prior swing low. I'm not so sure about the direction change we just got over there, but we're going to lock in 5 ticks on the Russell right now. And we're out with 5 on that. Okay, that puts us back to break even on the Russell on the afternoon. And so now we're only down on gold. Okay. And the gold, where it currently is that a good trade? Let's just check it out and see. You'll be going from here to here, right? From here, I think it is. From right there to right there. So yeah, that's a pretty good spot right there. Pretty good spot right there. And here it is. That stop's going to break even. And now I'm going to lock in something on that. That's 5. That's 9. And hopefully it's going to give us all 25, but we'll see. That last leg was pretty nice. It should actually give us all 25 right here. It should do this leg length again right here. We're pretty close to that leg length again. So we have 10 ticks locked in on this. I'm going to look to get 25 out of it. Now I'm going to go to 15 ticks locked in on this. And we got all 25. Bam. Okay. So that was good, because gold was the one that was whooping us a little while ago. So we're actually positive on almost everything now after getting our butt handed to us right at the beginning. And this ended up going down further, so now you got to extend this. You got to start here. You see where it went into the overbought, like that. Like that. That's what you should see out of that. Oops. Let me just start this at the top. Alright, the S has something similar. So you got to go from here down to here on the S and over here on the NQ. That's what you're looking at. And I'm positive on the day. I was completely positive this morning. You know, this morning I was up $422.50 a contract, and right now I am positive with everything that we've done in here too. You know, right now with what we've done in here on the NQ, I am now at plus 16. On the Russell, I am at 0. On the gold, I am now at plus 7. And on the ES, I am at plus 2. So I'm up $175 a contract in here right now. But I was down pretty good a little while ago. A little while ago, I was at, on the NQ, I was at minus 54. And on the Russell, I was at minus 5. And on the gold, I was at minus 30. And on the ES, I was at 0. So I was down $5.95 a little while ago. That's why you can't quit. You know, if you have a system that works, you just keep trading the system. And the gold, we're up to 7 now. And the ES, we're at 2. So we went from minus $5.95 to plus $1.75 in this session, just following the rules and doing things over and over again. I think I screwed up one thing and I ended up stopping out because of it. But you see, all I'm looking for is this to get into the overbought when we have something up here. What's not going to happen right now, it's not going to be at the optimal place to take the trade when it gets into the overbought. So what's going to happen, I'm going to have to get it up close, and it's going to take one bar, we'll put it up here, and then it's going to have to go sideways, which will flatten it out up here, and then we'll have to take the conservative trade when it comes out of the overbought. Okay. The question earlier was, am I positive for the day? Suited asked that earlier. And I'm way positive on the day. I was positive when I finished the morning session at 422.50, and right now we're plus 175. Okay. And I will get the Wednesday thing going here in a few minutes. Okay, I think I gotta sign out of this and sign into the other one to get that going. So right here, we just got into the overbought over here on the NQ, but we're nowhere near the midpoint where it's a good place to trade. All right. We just got into the overbought here. Again, we're nowhere near the midpoint where it's a good place to trade. We're not in the overbought here, so we have no reason to trade. And over here, this just extended from here. Watch. From there all the way up to there. Okay. So now right in here is a good place to trade that. Right in here is a good place to trade that. Right in here is a good place to trade that. And right in here is a good place to trade this. So we're getting kind of what we need right here. Now where it came out of the oversold and didn't make it, came out of the overbought, didn't make it into the oversold, kind of disqualifies the next trade here. That stinks because we're not going to be able to take the next trade, which will probably be the better one. I'm hoping here on the NQ that it gives us an up close on this bar instead of a down close. We can take the next down close on the NQ. That would be great. Alright. So for those of you guys who didn't come in last week, the colors down here was the new thing. Alright? Because normally these colors down here are not there. Normally it's like that. Okay. So that was the new thing that was added last week. This is the up close that I was looking for. So now I'm looking for the down close right here. It's going to be 12 points from the top. It's going to be 40.5. 40.5 is what I'm going to sell. Okay, that's where it is so far. It may still go up from there, but I'm just going to throw an order on. A sell stop limit order. And my sell stop limit order is on almost at the right place. I put it on at 44, but it should be 12 points below the top of that bar, so it'd be 43.25. 43.25. 43.25. There it is. Okay, 12 points below the top of the bar. Now you see this just turned to blue here on the ES, so you're going to be looking for longs there. And over here on the Russell, it just actually gave you the, it pulled out of the overbought right there, but you're not at any place where you really want to trade that. Okay. And the top of this move up, yeah, the top just moved up on this. Alright, so you have blue on a red background. I'm sorry, that is, go in here and change this, bar color, shut that off. I just jammed something in my eye. Alright, so what we want to be careful here is about the background color changing on this. Okay, it's going up a little bit too high to want to trade the NQ right now. And what time is it? It is 3:39, so you have 21 minutes. We did get back to positive here, which is good because we were pretty negative. And over here on the gold, we're in a pretty good place right here to have a trade. Alright, it's not the greatest spot. If you got an up close on this, I would want it to pull back. Now this is important. This little piece that I'm going to say right here, guys. If we end up with an up close on this on the gold, I would want, because it's going to take it out of the oversold, I would want it to have a pullback on the next bar. I wouldn't want to just enter at the open of the next bar as it comes out of the overbought, out of the oversold. I would want it to have a pullback so that my stop is below the midpoint. Okay, I did a session on placing stops and all that stuff a couple weeks ago, maybe a couple months ago now. But alright, we got the down close, so this is good. We got the down close, not the up close. We're still in the oversold, so now an up close on this one would be a great place to buy. Alright, 67.2. You would buy 68.2 right now, like this. Okay, so an up close at 68.2 should pull it out of the oversold, trigger us in, and it should go up here to the prior swing high. There it is, and now 5 ticks in profit. It's going to go up to 0.7. There it is. Stop at break even. And now it should go up to the prior swing high right here. It might take us out of break even right here. It looks like it's gonna. It did. But it should go up here to the prior swing high. Okay. It was right there. And that ends up being a break even trade. Alright, it still should go up there to the prior swing high. That was my aggressive risk management. It did take it out of the oversold, this one right here, just a tiny bit out of the oversold right there. Okay, and what do I got going on over here? What's that? Child, client, stop. I don't know what that means. And do I have something going on the NQ? There's no trade over there, so I shouldn't. Okay, I don't think it filled. Whatever it says there doesn't make any sense. Alright, back here. I ended up with a break even on that. That should go up here and put in a new swing high. Hopefully, it'll do that and it'll get flat up here on the top. Hopefully, there's no guarantee. All right. Does anybody have any questions about anything? I know I went into some detail about the TV trades and how the things work on the TV trades a little while ago when I was doing the other stuff. The new features down here at the bottom to carry the color down to the bottom so you can see it down here at the bottom. You just got to put a new TV trades range trigger on your chart. If you don't have that, if you click on this and you do not have this match TV trades tool buy sell area, if you don't have that, just delete your TV trades from the chart and come up here. If I save this right now, it's just about to go to trade right here. If I save that, then you just come up here and go to your favorites and put another TV trades range trigger on, and then it should be there, just like that. Okay, just like that. And then down here at the bottom, you just go to match TV trades by sell area. Now you're gonna have to put in the password. All right, you're gonna have to put in the password and hit display optimal trigger, and there you go, just like that. Alright, so what I was saying a few minutes ago is I thought we were getting a trade here on the ES right here. There it is, right in there. so we want to see an up close on this bar right here, or a down close. A down close you could be aggressive. No, I'm sorry, you can't be. It's going to be an up close off this bar right here. Low here 1650, so you'd be buying 1850 on that. Okay, Masood, did you hear that? It's got a low 1650, so you'd be buying 1850 on that. And there it is, and I'm long, and here it is, and I'm going to throw my stop and break even. And now I'm going to lock in 4 ticks on that. And it should make it up to the prior swing high right here. Okay, that's what it should do. There's 8, and I'm out with 8. So 8 ticks with 10 contracts on is $1,000. That was a regular trade right there. So I put this at plus 10 on the ES. I didn't see it over here, but the NQ had a trade too. I wish I would have gotten that one, but it would have been like that. Same trade the ES had right there. Same trade. The Russell probably had the same thing too. Yeah, the Russell had the same trade. All 3 of the indexes had the same trade at the same time. So over here on the gold, this, I'm sorry, I'm drawing the wrong way. We have a blue background. No, we have a red background. Okay, I drew that the right way. We have a red background. So this is what you're looking at from here to here. Right, this down close right here on the gold was an okay place to put the trade. To enter in right here, 68.5. It should go down here to 67.1. It's already run from 68.5 down to 67.8. So if you got it, you should have your stop at break even. This right here, because it went from the oversold to the overbought, now it does this, and this was something that I know a lot of you guys have trouble with, but it crunches everything up on you. Alright, so all you can hope for when it's like this is that it's going to stretch it out. It's going to keep running up, so it stretches it out like this, and it keeps going and going. So you have something to work with in there. Okay, because the only trade we got out of that was the ES trade. We didn't get the NQ, and we didn't get the Russell. Okay, is everybody with me on all this? Everybody following me? So a down close on this is going to put it in the oversold. It's going to put it right here at the midpoint. A down close on this is going to put it in the middle here. It's not going to put you in the oversold. So you're not going to have a trade here on the NQ. You will have a trade on the ES. You will not have a trade here on the Russell. So now on the Russell, the next bar on the down close would be a spot where you could trade aggressively. The ES right now, you could trade aggressively right here, or you could wait for a conservative trade where it bounces off the midpoint. The choice is yours right now. Okay. It's getting toward the end of the session, so the markets are starting to heat up a little bit. Markets are starting to heat up a little bit right here. So it's an opportunity to jump in here and be aggressive. I think on the ES, I'm at break even, and it looks like it's going to give me a break even, and it just did. Okay, now the other ones, they got down here, so you could be aggressive on the Russell. You can't yet on the NQ, but on the Russell you could be aggressive right here. You could also wait for it to give you the up close. It's up to you, whatever you want to do with that. You know, the up close is going to be a conservative trade from right about here. The aggressive would have been an entry right about here. I did the aggressive. I'll bring it over and show you in just a second here. Stops at break even. And the NQ, you need the down close. That could also be aggressive or conservative. All right, I'm going to lock in just a couple here on the Russell, and I'm out with a couple on the Russell. So let me put in this ES break even trade. Put in this over here on the Russell for a couple, and this was break even. Let me mark that. Break even. Okay. And we need the down close over here on the NQ. Okay. Alright. It's a lot of trading, a lot of talking. This is a whole other hour and a half of me trading. I don't usually do this much in the afternoon. But we're coming up here to 3:47. We have 13 minutes left before the actual stock markets close, before the equities close. So we should have some opportunity in here. Now, I was curious if the fellow that signed up for the trial... No, he did not. He did not show up. Okay, but you guys all see what I'm doing, right? It's all pretty straightforward. So now, coming from here up to here, you gotta redo this, so you're all crunched up. So you would have to switch tactics. Okay, we never did get the down close we were looking for over there, so that stretched it out some more. Over here, now this changed, it just jammed it all up like this. So the Russell and the ES aren't really going to give us anything else right here unless you go aggressive. By going aggressive, you would go long on the open of this bar, as this went into the oversold with the blue background. You go long on the open of that bar. Okay, now the gold has a blue background. Came out of the oversold. This is what you're looking at. The gold is really messed up over there too. Okay. Alright, so George, I'm not sure if you're still here, but if you are, hopefully I explained well enough about the arrows and what these yellow arrows mean and how they can be used, or how they really, they're there to get your attention more than anything else. Okay, so over here now, we're in a red background, so you have to draw from the top down. Alright, the top down, it would be the top right here, down to here. That's what you're looking at. And so over here, this changed directions, drawn from the top down there, like that. This hasn't changed directions yet. This right here on an up close would actually be kind of a long trade right here, because the up close would be right there at the midpoint. Now it's not, because the way things just came together right there, it went all the way down to 100% retracement. Things jumped around right here, so yeah, short. What is that? 15 inch. Just went back into the blue over here. Still in the red here, now it's back in the blue. So I'm going to give it a minute here to let these things figure themselves out. Alright, right now the way things stand, we're plus 16 on the NQ, plus 7 on the Russell, we're break even on... I'm sorry, plus 7 on the gold, we're break even on the Russell, and we're plus 10 on the ES. So after being down $595 a contract, we are back up. Always a way to restart the retracement line from which swing high and low. You know what? I have a video for that. I'll give you. I created this video this morning. There is a Telegram channel. For those of you guys that are in Telegram, there's a channel that we created that's open to the public. Alright, now it's a TIQ channel. And those of you guys who know me, you know the TIQ channels. But I created this one this morning, picking where to draw retracement lines from. You can join this channel if you want to, TIQ videos. But I will copy message link. No. I can give you this this video right here. That's videos on my desktop, so I can give you. But you can go watch it if you want to. I think copy message link. I might be able to give you that. Wait, yeah, let me see if that turns into the appropriate thing. There, I think you ought to be able to go look at that, Wayne. Okay, it's open to the public, so you ought to be able to go right in there and look at that. Alright, so we're in the oversold right here, and this, I believe... Sorry, I went and jumped off there for a second. Let me draw it here for you. You would be going up from the bottom. So, we got into a blue background right here, so you could buy this up close where it came out of the oversold. I did. I'm throwing my stop at break even. It's at plus 70 ticks right now, and I gotta move this out of the way so I can get to it. Here it is. Okay, so I'm in down here at 60.50, and I'm gonna go all the way up here to 64.50. I don't know. Yeah, I was way up there at 68.50, and I think it just took me out at 64.50, so I ended up getting 16 ticks out of that huge trade. Oh man, that stinks. I was way up there, like way more than that, but I'm getting 16 ticks out of that. Okay, and the ES is not in the oversold, so you don't have a trade that you can do there. The way it's coming together, you're not going to have a trade. Same thing here on the Russell, you're not going to have a trade there. If you got a down close on this, it put you in the oversold. You're going to have another down close. It's going to go sideways in the oversold, and then have one that closes up to take you out of the oversold. Alright, so you're 3 bars away from a trade on the Russell. And we took that one on the NQ. It didn't put in a higher swing, so now it crunched everything up even more. So the one thing you can do on the Russell, if you want, I'm not on the Russell, on the NQ, what you can do on the NQ if you wanted to, is you could be aggressive and buy the open of the next bar if this goes into the oversold on the down close. Alright, it didn't, so you can't. So the gold just changed to bearish. Alright, we have bullish, 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 and bearish. Alright. So I haven't said this in the whole session. If you haven't taken a trial with us and you want to, go here to tvtrades.com. Alright, click on this arrow, right? And click on the orange. It'll bring you down to the bottom. You just take the trial there. Okay. I haven't really even thought about that. If you're in here and you haven't taken the trial and you want to get started, that's all you have to do. Like, there'll be links with the emails that go out and all that stuff. There'll be an automated email that goes out after all this is done. You guys can just take the trial at that if you want to. Anywhere you want to take the trial, you can take the trial. To get it from either website, there's TV Trades and there's Target View Trades. Now, this is going to have the link in about an hour. This right here will have the link for next week's. It'll say 618, sign up here. This is targetviewtrades.com. The recording of this webinar will be right here at targetviewtrades.com. If you hit upcoming and past webinars, this was last week's, and one for next week will be right here. This recording will be right here. You can sign up for next week's up here. Alright, but this recording will be right here. This one will be down here. Okay. Just so you know, that's targetviewtrades.com. The Russell. Let's draw the Russell for you. Okay. You should be going from the bottom up. So right here, it went from there up to there, but if you go from the one before that, right here, would have been a spot for an aggressive long trade. If you want to go from the one before that, it was in this chop right here, so you couldn't really do anything with the chop. I didn't do anything. That was at 355. Okay. You have Telegram on your phone. Can I give you access to the TIQ video channel on your Telegram when I have a chance? You have access to it. You just got to join it. Let me get the link so you guys can join that if you want to. Yeah, you can join this channel. Those of you guys that have Telegram, I'll just give you the link to that. Alright, it's a public channel, so we made that a public one for you guys. So you can all go join it if you want to. Alright, it's got some pretty good videos in there, stuff that I've done. Okay, send to all, so you can all go join that if you want to right now. And it's got videos in there that I create in the morning session, usually. Because everything that I do in here is recorded. But not everything that I do in the morning session is recorded. Okay, so here, I think I sent that to everybody. Alright, so now what we're looking at over here on this, we'll go from here to here. Okay, and on this, just in chop, on this, we would be going from here down to here right now. Okay, so an up close on this bar would be an aggressive short here on the Russell. An up close on that current bar right there would be a really aggressive short. It's going to put you in the like that. Alright. So you got the yellow arrow right there. It's saying the next bar could be your trigger. It's actually the way that I'm showing you right now. It's already triggered. And I'm throwing my stop and break even on it. Here it is. Okay, I'm going to lock in just a tick because I don't have anything in the last couple of trades. So it should go down to the prior swing low right here. It should go down to 49.1. Alright. So I'm going to lock in 5 on that. And I know that doesn't seem like much because it's only $5 a tick, but that's $250 for me. And that puts us on the board on the Russell because we were at 0. It is going down to the swing low, which is good. That was that right there. It is going through the swing low, which is even better. The ES. Now the ES is in a tough spot right here, guys, because you got from here to here. So you have this little bit of junk right here. You can be aggressive, buy it aggressively right here on the open as it goes into the oversold. That's about the only trade you got going on right there is aggressive, really aggressive long trade buying the open of the bar as it goes into the oversold. Okay. It should get up at least up to halfway through here. It should get up to 67.25 is what I would think it should do. Okay. You have basically the same thing going on over here on the NQ. And the NQ should get up to about right here at 83. Probably is what I would think. What time is it right now? 3:58. Okay, so I'm running out of time. We're running out of time here. We don't have any really good trade setting up because the marks are just getting crunched up here. Alright. But those couple that I told you about, I want to break even on that. 67.25 is what I thought it was going to get up to. 67.50. That was just, I think, 9 ticks on that. And on the NQ, 77.50 up to 84.50. That is 7 points. Now up to 86.50. That's 9 points. 87.50. That's 10 points. And 10 points. Alright. Those are probably going to be my last couple of trades, guys. So that aggressive one there, and this aggressive one here. And the NQ, that was 10 points, right? It's 40 ticks. So it's going to end up working out alright. We were down $595 a contract, and we'll see how we end up here in just a minute. Well, it's 4 o'clock, so we'll see how we end up right now. Alright, on the NQ, we are now at 72 ticks. After that last trade on the Russell, we were at 5. On the gold, we are at 7 still. And on the ES, we are at 19. So we went from minus 595 up to 692. So it's an $1,100 turnaround. It was a lot of trades, I'll say that. A lot more trades than I normally do in this session. 5, 10, 15, 22 trades. 22 trades in this session. So, that was a big turnaround. I'll write something up about it, but the whole idea behind all this stuff is that if you have an edge, you got to keep executing your edge, right? I know a lot of you guys, there's a part that you have to get over mentally, right? The psychological part. It's huge, and you got to get over that, right? You got to stop looking at it as, I don't really look at it as dollars and cents, really. You know, I write stuff down. I don't write it down in dollars and cents. I write it down in ticks. And then at the end of the day, I figure out what it all is. But, you know I have an edge. And I know if I keep executing my edge, it's going to work out over time. When we started this out, I had 3 stop outs in a row, didn't I? I started out with just a little positive on the NQ. Then I stopped out minus 60. I did a stop out on gold. Then I did another stop out on gold. Then I had a little bit on the Russell, and I stopped out on the Russell. And then it all went uphill from there. So it started out pretty bad, but it all went uphill from there because I know I have an edge that works over time. So I have to just keep executing my edge. I know eventually it'll get me to where I want to be. You know, there was just another trade here on the NQ you could have done. Right here on the S, you could short right here on the S. Just executing the edge over and over and over again. The same thing again and again and again. Okay? You just got to get your head around it. You know, I know sometimes you have like a good day like this, you know, where I'm up pretty good right now, and then you have a bad day where you're down twice as much as you were up, and then you have another bad day where you're down twice as much as you were up. And you can't get your head around that. So you stop executing the edge and you start changing the edge, and then you don't have an edge anymore. Then you're guessing. Okay. You got to have something. You don't need to do everything that I do. Like, I really only did one or two things in here with all the trading that I've done. I really only did one or two things. I did aggressive trades. I did two kinds of trades. I did aggressive trades and conservative trades, but the aggressive trades that I did were not the super aggressive trades. The super aggressive trades are when you have down here in the TV trades range chart, if you put that guy on and that guy on, change this to a line, and you get rid of that. Oops. Well, it isn't going on the right way, but hang on, let's see if I can do it the right way. Get rid of the inputs from the ultimate trigger. I think that's what I gotta do. There you go. Get rid of the snipe. That's what I was looking to do. Alright, this is the really aggressive. So down here, anytime the blue actually leads into the overbought, you would sell the next bar. Anytime it leads into the oversold, you would buy the next bar. Leads into the oversold by itself, you buy the next bar. Leads into the overbought by itself, you sell the next bar. That works great in chop. And like all this market right here where it was all choppy, that would have worked out great when the markets are choppy like this. It's when the markets don't get choppy, when they start to stretch out like that, we have the flat spots, that's when you end up stopping out with that. I didn't do that aggressive trade, right? Because the markets were not consistently choppy. So I didn't do that super aggressive trade. I stuck with just the moderately aggressive trade, alright? Where you're trading in the direction of the background color, but you can do it whenever it goes into the oversold. You can buy. And I didn't do every single one of them. I did it more where it was at the 50% mark. Okay, that's what I was looking at. So I executed the edge that we have again and again and again, and I turned it from being down 595 to up 692.50. You gotta get your head around the stops. And if that means you go down to micros, there's no shame in that. As a matter of fact, the micros have more liquidity than the minis. The micros are more liquid than the minis, so it's actually probably easier to trade. You have less slippage, and you can trade. If you don't want to risk as much money, just go down there and trade 2 or 3 or 4 of those. It takes 5 of those micros to get to where you would risk half as much per trade as you would be doing with a single contract here. So you can do that if you want to. And Masood said he wants to talk about options, so maybe next week we'll talk about options some. But right here at the end of the session, let's just look at a couple of things. I know I'm going over a little bit right here, but I want to look at a couple of things. Let's look at, say, look at Apple. Okay, look at Apple on a 100 range. That means every bar is $1. Okay, and now in here, what I'm more interested in, I'm not interested in these things. I'm more interested in these guys right here. All right. So right here, at the end of the session, right here, this is all right. These are all $1. So at the end of the session, we didn't get anything on Tesla. I'm sorry, we didn't get anything on Apple here at the end of the session. We got this one earlier on this morning to go short right in there. All right, but let's look at Tesla, TSLA, and I don't know what price this I don't know what Tesla's priced at right now. This right here would be a perfect opportunity to look at call options. All right, right here, look at call options for the morning. If I was watching this, I would have bought call options based on this information right here. When this arrow happened, at the close of this bar, I would have been buying call options. Because by tomorrow morning, whatever the call options are, I don't feel like going out to look for them right now, but if anybody has call options available with them right now, that expires, say, Friday expiration, or maybe next Friday expiration, do the weekly call options. What are the calls worth that are one out of the money right now? Whatever they're worth right now, one out of the money. By tomorrow morning, what this should do right here, is, the next swing high is all the way up here. It should get all the way up here, but yeah, if it really does break out of this, it should go all the way up here. Okay, you should see price all the way up here tomorrow morning on Tesla. At some point tomorrow, it should be up about $6. Now, I don't know if they have earnings or anything like that coming up. They probably don't. But you would expect a leg length about this big, so it should probably go up to here, then pull back to here, and then go up to here, and then pull back to here, and let me slide this over so you can see it. This is what it should do. Okay. Tesla should continue up in the morning, maybe up to there, then pull back to here, then go up to there, then pull back to here, then go up to there. That's what you should see tomorrow. Alright, so if I make a screenshot of this, you can look at this. Maybe I'll post it tomorrow. We'll see. But that's Tesla on 100 range. These are $1 bars. Alright, $1 bars. But if you were to buy the call options right now, by the end of the session tomorrow, if they get up here, or even, in the morning, if it gets up to here, first thing in the morning, those call options are going to be worth, multiples of what they were worth, or what they're worth right now. Maybe after, let me just write down a note to myself. Tesla calls, and let's say we'll do something around 327 calls, Friday calls. Okay, I'll go and get that information and post it. That's what you can do with the options with this stuff. Now, I originally created this stuff for trading equities. Why do I keep doing that? I didn't mean to do that. Let me undo that again. There we go. Alright. So you could trade the options and do all that kind of stuff with it. Alright. Alright, so I've run over by 10 minutes. If it's just the TV trades arrows, no, you don't really need the range trigger for that. The range trigger was created way after. The stuff in the range trigger actually goes into the TV trades arrows a little bit, but not a lot. So yeah, when you don't really need to look at the range trigger if you're going to be doing those big arrows. Right, these arrows right here. You don't really need to look at the range trigger for those. Okay? Alright, so let me stop the recording right now, guys. Alright, thank you all for coming. Again, if you didn't take the free trial and you want to take the free trial, go here to tvtrades.com. Click on this right here. It's going to bring you down here to the bottom. Take the free trial right there. Okay? Do that. There'll be a link in the emails I can send to you too. There'll be a link in the YouTube thing that's going to be going out. So there'll be links all over the place to take the trial. You can always just go out to tvtrades.com and take the trial there, or targetvtrades.com and take the trial there. Either one of those will work anytime. Alright? This is Target V Trades, targetvtrades.com, and this is tvtrades.com, tv-trades.com. Alright? Let me stop the recording here.